Hi, Catalina here. This update is meant for lenders and loan officers. First and foremost, I wanted to share an update that we're super excited that we now have our lender dashboard up and running. If you have not gotten an opportunity to check it out, it's available at lender.myloansense.com. We do allow loan officers to sign up for limited time free trial of the product. What is amazing is you log in and you sign up, you log in and you have a link to not just to estimate the consumer boosted purchasing power, but you also get a link to act as a lead capture and to be able to share with your consumers with student loan debt, meaning they can see right away. You could put this calculator in your email, on your website, and it will allow the borrower to estimate, if they adjust their student loans, how much more house can they afford, which is pretty cool. Why is that so important in this market? This market being in the mortgage market right now, as well as in the student loan market, because number one, actually it's interesting. The people that can afford to buy now, the income is actually going down. You know, during the height of the under 3% rates, the average income of the primary purchaser was about $86,500. This is a recent NAR finding from the National Association of Realtors. And this year, in the thick of it, the average income of accepted offers is around $71,000. So even though it's counterintuitive, you would think your income would have to be higher, but those that are more moderate income can now actually get their offers accepted. So those with student debt and those that are more moderate income tend to have student loan debt. So we can provide a product that can help you as well as your consumers estimate that boosted affordability as well as how much they can adjust their student loan. You send them to LoanSense. We help them get all the information they need, enroll all their paperwork, and within 21 days turn around the closed loan cycle. You will have helped a consumer or two or three improve their debt to income and close on a loan. And the best part is you can try it, get results before we ask you to actually even pay us. So in this market, I know times are tough. We want to help you help more people. And as a result, we are here for you. Lender.myloansense.com. I did not create this video to be a commercial, but more also wanted to share some information. In the underwriting guidelines, I want to talk a little bit about the underwriting guidelines because the student loan payment pause has now been extended till June 30th of 2023. What does this mean? This means lots of lenders are using the student loan balance. Imagine it's $100,000. They're using 1%, which makes the payment and in the DTI $1,000, or they use 0.5, depending if they're going under Freddie, Fannie, FHA guidelines, they will use 0.5, right? So $1,000 or $500. The good news and what I wanted to share was that you do not need to use $1,000 or $500. By actually kicking the borrower into repayment, we can actually use what their payment is if that is more advantageous for their debt to income. I wanted to share that as well, especially as the payment pause is getting extended and more people are not going to be more than 90% of student loan borrowers will not be entering repayment in January as anticipated. So I wanted to just update the lender community on the guidelines surrounding and pertaining to using 1 and 0.5% of the balance versus actually using the payment. You can use the payment. We just need to help the consumer be kicked back into repayment. We can help the consumer do that, and as well as answer all their questions. And we can also help them answer their questions even post-close on how to manage the student loans, what are the implications of enrolling into various student loan programs, etc. So you can lean on us to do that. And you can do that just by signing up at lender.myloansense.com in our dashboard, getting our product, start using it. And you could start for free since we have a limited time free trial. So I just want to put that out there. If you are a representative, like C-suite leader at a lender, we can automate the calculation of the student loan changes immediately. As soon as an application comes in, even before through connecting to your various tech stacks so that it's the other way around. We inform the loan officers of when a reduction is possible. So I wanted to point that out as well. That may be an interesting use case. We also share back all the data in a lender dashboard back to individual loan officers. So that's what the loan officer is signing up for when they sign up at lender.myloansense.com. Our team is knowledgeable about the guidelines, knowledgeable about student loans, and we're here to join your team and help you have more valuable and meaningful conversations with borrowers. So I want to talk very briefly. What are ways to do that? Ways to do that include taking our marketing assets, going to market, going into the market, whether it's social media, educating consumers around the student loan debt, using even our already created PowerPoint presentation slides on educating consumers and holding even your own educational webinars, talking about how does student debt affect your home buying affordability, right? Talking about those things. There's currently about 17 million student loan borrowers that are of prime buying demographic who are renting. So it's not a niche population. It's a quite large population. Even if they're not ready to buy today, you can start the conversation, nurture that relationship, and get them to refer also their friends and peers they work with student debt to speak to you when they need to buy. Okay, so one aspect is talking and prospecting clients and being able to talk about debt, being a true advisor at the very beginning of the pipeline. There's also possibility to go back and remarket to consumers who may not have gotten their offers accepted, who you had great conversations with that you know have student debt, to let them know about this program as well as a way to prospect and re-nurture. And then, of course, as I talked about in the enterprises, they're coming through the pipeline, you pull credit and you want to discuss options with them. Our product is also there for you to help them understand the impact of their student debt to their ultimate home affordability. We see everything from, reducing the debt significantly, like payment significantly, as well as getting access to student loan forgiveness. I get the question all the time, is this just a refi, or is it a refi? It's not a refi. It's enrolling into a federal government program. It is something they can do on their own. But oftentimes when lenders send consumers to do things on their own, they don't come back within the closed loan cycle. They lose a relationship. They don't hear back from that consumer. We can keep that consumer in your loop by updating you and providing their data in the lender dashboard, as well as get them back to you. I just wanted to share also, because it's very, very timely, a Freddie study came out and said about a third of consumers do not shop rates, do not shop for loan officer. If you provide a service that can boost affordability, so even out of those 2/3 that do shop, if they can't get as much home with other lenders because those other lenders are unaware that they could adjust their student debt down and increase their affordability even more, that gives you a competitive edge in the market as well. But it's all about relationships. It's all about trust. And we're here to help you further build that with your consumers. Please let us know if you have questions. If you do not, we welcome you to sign up at lender.myloansense.com. If you found this information to be helpful, please share it with your colleagues. Please do not be selfish with the content. Like, subscribe to our channel, and happy Thanksgiving. We are grateful for your time and attention and for being part of our lender community.